Lulu is a trending stock that's looking hot. So the Lulu earnings came in, well, almost right exactly where they were expected to come in. They had really poor earnings, but right on what people were expecting. And they just showed that they have been able to transfer a big amount of their store sales to online sales. So um, people like that metric. And you can see that this stock has been following the general shape of well, where's Feb? Let's see. Yeah, right from here. So this stock has been following the general shape of the crash, but having extended moves to the upside. So this stock is more bullish than the general S&P, but following roughly the shape of the S&P. And we get a pull down here that's following the S&P. So that is likely to continue, and the online sales picture um, is a good look that they're doing better than a lot of the the other stores that haven't been able to convert to online sales. And so Lululemon is, I'm sure everyone knows what they are, but they have sort of fancy stretchy pants. It's like an athletic, stylish apparel store. And if you just take a look at the S&P, you can see the same general shape as the Lulu, but of course the S&P did not like blast through the highs like Lulu did, but the shape of the waves of the S&P is very, very close to the shape of the waves on Lulu, and this same pull down happened. So I guess just the uh, the upside moves on Lulu have been exaggerated, and downside moves have been about the same as the general S&P. Um, So for this, I mean, just the general same kind of outlook. I mean, right now, technically, we are in a bullish area, and we've bounced off the top of this long-term moving average again into a bullish area on the technicals. But on the fundamentals for the market, I mean, we have the XLF breaking down. We have the small caps breaking down below their long-term moving averages, and the VIX exploded yesterday, way up into bear market territory. It was trying to push down out of bear market, like this kind of 15-ish range would be kind of trying to push out of bear market territory on the VIX. But it started to reverse while the S&P was still, and then it just absolutely exploded on that down move. So it's a ton of bear market fundamentals, and still technically in bull market area up here, still making kind of bullish moves. And so in the bullish case for the general S&P, the bulls just want to continue this same general direction and get above this bull market support line from the 2018. And so we've made it back to this line and rejected off of it. This is the line that we tested during the crash here, and we swung all the way back up, and now we back tested and rejected off of it again. And so in the bear market case on this everything bubble model, we want one or two tests of this line, uh, and then break the next one and back test it. That's kind of the way that bubbles unwind in general. Is you back test the line, you swing out and back test it again. And so I was looking at this as a little back test and a swing out back test. I thought that we already back tested the 2018 line and got away from it because we got all the way down here below the 12-year bull market support line, which is a lower angled line. And no, we've swung all the way back out, all the way up to this Volmageddon line. So that's the thing to watch now. Is are we going to for the bear market case, are we going to back test this thing again and terminate it, or have we already back tested it now and terminated it? And then and then the bears need to get through. The bears need to back test potentially this one again, but definitely need to back test and break that one. Back test and break this long-term moving average, and then break this other long-term bull market support line and back test it. And then once that happens, then you can get a longer term swing for who knows, like a year or something out until you back test it again. And so that's the kind of the back testing, unwinding look on the backside of a bubble for the bear case. And then, yeah, for the bulls, I mean, just keep heading in this direction and get up here. And so that's the look at Lulu with a very similar chart to the general market and just sort of the volatility and yeah, I mean, Lulu is pretty typical kind of stock that doesn't actually look good fundamentally, but the the trading chart looks really good, and and their business model looks a whole lot better than most of the mall stores. That's for sure, because most of those stores have not been able to convert much of anything to online sales, which is what everybody has to do right now. And so I think Lulu's ahead of the game, uh, ahead of a lot of other mall stores. As far as something that you'd want to like short long term, like J.C. Penney was doing horrible for a while, but there's a ton of those kind of mall stores that the business model is just awful now, and they're not really able to compete online. Um, so as far as shorting kind of things, I don't think Lulu is a good target um, for kind of the mall for shorting the mall shopping stuff. Gonna go down long term, um, but that's definitely one thing to look at is the solvency of all these mall stores, and Lulu is not immune to that. They're just in a slightly better position than most of the mall stores are, and that's probably good. That's probably good for this one. This is not investment advice, and please hit the subscribe button. And yeah, happy trading.